Good morning and welcome to the third week in the month of May. This is Business Morning. Thank you so much for joining us. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for joining us. Let's take a look at what's in the news. Oil prices were mixed in a tight range today after the recovery of a major U.S. pipeline network eased concerns over supply, though fresh restrictions in Asia amid the surging COVID-19 cases weighed on sentiment. Gasoline shortages that have plagued the U.S. East Coast slowly eased yesterday, with 1,000 more stations receiving supplies as Colonial Pipeline's 5,500-mile system recovered from a crippling cyber attack. Brent crude oil futures up 3 cents at $68.74 a barrel, while West Texas Intermediate crude futures is up 0.1% at $65.45 a barrel. The two contracts jumped nearly 2.5% on Friday and managed to book a small gain last week, marking a third consecutive weekly increase.
And back in Nigeria, the Central Bank of Nigeria has removed the exchange rate of 379 naira for a dollar from its website homepage, conforming with the bank's policy that the NAFEX rate is now the default reference exchange. Since the Central Bank last adjusted the rate in August 2020, it has retained the exchange rate at 379 naira for a dollar on its website. However, all government transactions since 2021 have been converted using the prevailing exchange rate at the official NAFEX window, confirming that the SY official rate is of 379 naira for a dollar. Well, Mr. Bismarck Rwani, the Chief Executive Officer of Financial Derivatives Company, joins us now to help us understand the implication of the action by the Central Bank, that is them removing this 379 naira for a dollar from their website. Good morning, Mr. Rwani.
Yes, good morning, viewers.
Good morning.
Good morning. So there are different interpretations to this action by the CBN. Some say this indicates the beginning of a gradual harmonization of exchange rate. From your perspective, what does it mean and what are the implications?
Well, the Central Bank has not explicitly come out to say that the removal of that rate from its website was not as a result of a glitch, whether it was a deliberate policy move. And so anything now is in the realm of speculation. But if I am to assume that this is a unification of exchange rates around the I&E window, which is possible or plausible, then it has certain implications. One, it means that the currency has moved from 380 official to 410, 411, which is a depreciation of 5.26%. So it has an impact of about 20 naira on every dollar. The first impact is to look at the total federal allocation money shared from the federation account. If I'm to assume an average of 700 billion naira as the average going forward, this will increase the FAC allocation to the states and federal government by 37 billion naira. The second impact will be on the price of petrol. Today, the petrol importers, NNPC and others, get the money at the official rate, and that is at 380 naira. If they are now to get it at 400 and
Hello, Mr. Rwani.
Can you hear me?
Yes,
Okay.
we can hear
Yes,
you now.
hear you now.
Yes.
Okay. If I'm to, the second impact will be on the price of petrol. Today, petrol is priced at an increase will be a 9 naira increase, which will take it to 174, 175 naira a liter. Having said that, we should remember that the landed price of petrol is anywhere between 210 and 212. So that doesn't solve. Then the below the changes who get money at 383 naira today will be getting it at about 403 naira. Basically, the cost to them will be, it goes up to by 400 to 410. So there'll be a sharp increase of the below the change amount. Now, are they going to pass this to the market? Today, the power market is at 485, 486, while the below the change are getting their money at 403. If you are to take that up it will increase the price of the dollar price at about 25 naira to a dollar, which will take it from 485 to 510 initially. But then, when we do the effective weighted utilization, we think that the naira will appreciate in the parallel market in the next couple of weeks from 485 to 480, rather than move in the other direction. So let us summarize. One, FAC allocation will go up by an average of 37 billion naira a month, which means that the states to increase in naira terms because they are now servicing at 410. The price of petrol will go up by about 9 naira a liter officially, but then it will also go up because there are other variables in it. The borrow to change amount will increase today from, instead of 403, which they're 383, they'll be getting it at about almost 410 plus 3%, plus 3 naira, 400.
Yeah.
Knee-jerk reaction, parallel market will move in the wrong direction initially, but will self-correct to about 480 naira in the next 3 to 4 weeks. I hope I've been able to clarify the issue.
Yes,
Thank
you
so
have,
much.
as usual, Mr. Arwani. Thank you so much for shining the light on some of those gray areas.
Thank you, Mr. Arwani.
The action by the CBN.
All right, so moving on now, the National Bureau of Statistics is expected to release the inflation rate for the month of April, and the last rate, which is for the month of March, stood at 18.17%, and now it's been predicted that it would go higher. How are operators adjusting to the various economic variables in the country? Dr. Alaba Olushemore, the country director of Small Business Academy Africa, joins us next. Do stay with us.
Oh, you're welcome back. Nigeria's inflation rate for March 2020 was 18.17%. How differently has this increase in inflation and the expected increase, we're still awaiting the NBS to release the latest inflation rate. How is it affecting businesses? Dr. Alaba has already been introduced, joins us now. Good morning, Dr. Alaba. Thank you so much for joining us.
Good morning, Nigeria.
So how is this inflation rate and the expectation that is going to go even higher, how is it affecting you as a business person?
Of course, naturally, the cost of doing business going up. If you observe even the consumer goods that you have around, because the manufacturers are looking at possible consumer resistance, what do is to reduce the size of the package or the sachet or whatever they are selling, because they don't want to increase price, right? Consumer spending power has been reduced considerably. But what do we expect? Inflation is a function of interaction of demand and supply. The supply of goods and services is declining because of the level of insecurity in the country. Production level, is reduced. Manufacturers cannot produce because they cannot bring in the needed inputs into the country. Don't forget that interest rate, inflation rate, exchange rate, they all move in the same direction. And so the cost of doing business, of the inputs for manufacturers, particularly the SMEs, are going up. And therefore, is emasculating majority of the manufacturers, the small business owners. And it's not even helped by the operating environment. It's not conducive for business. The power is not regular. The multiple tax problem is also there in the country. And of course, the insecurity, you can't move from one place to the other. Delivering goods from one place to the other has reduced. I read the report, moving goods from the airport, Lagos airport, seaport rather, about $4,000 to move just a container. All right. Whereas to move the same container from maybe Far East, you're going to spend about $12,000. You find that these are some of the factors, environmental factors that are affecting businesses in Nigeria, particularly the small business owners who cannot really maneuver. And that's why people are just going to contract. Nobody is manufacturing. Nobody's really doing any processing in the country, except for those who are in the service industry, like banks and mobile network operators. So really, because of insecurity, I still expect that prices will go up, right? Inflation rate will also go up in the extreme period when they bring out the inflation rates. So really, it's really biting up, whether it's consumer goods or industrial goods.
right.
It's affecting everybody,
Okay.
consumers, the firm, and even the government. I mean, do you remember what is happening in Kaduna now, when government is trying to put some workers into to casualize them?
Yeah.
So these are some of the factors, because the income is just not there. So these are the issues. Really, unless and until we solve the security problem in the country, we'll be moving around in circle. And I think that whatever it takes to solve the security problem, we need to do it, even if we forget about our sovereignty. Getting help from developed countries, we should do it. Otherwise, there can't be any progress.
All right. Still talking about insecurity. There's this conversation of inflation and unemployment breeding desperate and dangerous citizens, and insurgency captured as insecurity causing inflation. Or is inflation driving insecurity? Which of the divides do you belong?
Inflation cannot drive insecurity. It is unemployment that is driving insecurity. When people are unemployed, they can just do anything to survive. I mean, we should be worried when police stations, security outfits are being attacked on a daily basis in parts of the country. Everybody should be worried that we are moving gradually to a state of anarchy, and that's not good for the country. And if you're not careful, we are moving towards a failed state where nothing works. God forbid, bad thing, anything can happen when you have that. So it's unemployment that is driving insecurity, not inflation.
Okay, so a report by the Presidential Economic Advisory Committee notes that insecurity cost the economy $10.3 billion last year. And this was, of course, in the midst of the pandemic. Now, with this recent incidence of insecurity and, of course, the still hike in inflation figures, which way do you see the figure going this year?
No, of course, it may get worsened, because the insecurity is deteriorating very fast. Before, it was limited to the northeast of the country. But as we see, the eastern part of the country, the south of the country, have been engulfed in a number of crises, where security outfits, police stations are being attacked almost on a daily basis. So you don't expect productive activities to take place in these areas. So in a way, you are talking about maybe just barely 1/3 part of the country. And when there's insecurity, you cannot plan long. And without strategic planning, there's no way you can have economic growth in the country. So things are likely to deteriorate further unless government makes desperate efforts. Like I said, we must forget about our sovereignty and see how we can actually seek help from abroad. After we have gotten the help and we solve our problems, of course, we can go back to the issue of sovereignty. So really, there can't be any improvement. Like I said, except those that are in service industries, things are deteriorating very fast. And of course, I expect that things may get even worse.
All right, but
so Nigerian situation is a very funny thing. Normally when you have a high rate of inflation, we expect economic activity to actually go up. But the reverse is the case. High rate of unemployment competing with the high rate of inflation, what we call stagflation. So it's a really dicey situation. We can't have any improvement. Honestly, we don't need any economic prophet to tell us that. Things are likely to deteriorate further.
All right, let's look at some possible solutions. Yeah, is there any way businesses can be protected at times like this?
Protection is, like I said, in business, you need confidence that things are going to get better. You need confidence that if you move from point A to point B, if you do business, you have to interact with other people. You can't do everything on the phone. Except those who are in the service industry. But if you are producing goods and services, particularly the SMEs, you have to move your goods from point A to point B. You have to move your raw materials from point B to point A. So really, you find that if we are proposing any suggestion, honestly, it will be short-lived. The real thing is that we need to solve this insecurity problem. When I appeared on your telly about a year ago or so, 1.5 years ago, I mentioned this, that unless we solve this insecurity problem, we just be dancing around the circle. And of course, our economy is worse off because we depended solely on oil for so many years. And of course, we are having, the impact today. Most of our industries are import dependent. All right. So the linkage between the agricultural sector and the manufacturing sector is almost zero in the country. All right. So most of the everything starts actually with our industrialization policy that we started in the 60s and the 70s, import substitution industry approach, where we establish industry that depend on foreign inputs. So really, there's no another way out. We need to solve that problem of insecurity in the country.
All right, Dr. Alaba, just before we let you go.
Manufacturers can reduce, pardon me? Yeah.
So just before we let you go, of course, the security problem is a major one, but we also still have the pandemic. COVID-19 is still here, and the government has reintroduced, the COVID-19 restriction. Gyms, clubs are closed. What considerations would you say the government should be giving to businesses at this time when they're reintroducing these COVID-19 restrictions?
Tax holidays is it. They must be given tax holidays, for the next maybe 1 or 2 years, particularly the small and medium-scale enterprises. Unless you do that, you'll be emasculating the small business in the country. That is the way out.
Okay. Thank you so much, Dr. Alaba. Thank you so much for sharing your thoughts with us this morning.
Pleasure.
We do appreciate your time. Dr. Alaba Olushemure is the country director of Small Business Academy for Africa. So we'll take a break now. When we come back, we continue the conversation on another level.
All right, you're still watching Business Morning. For our next conversation now, a World Bank report on migration and development shows that Nigeria received over 40% of sub-Saharan Africa's share of remittances, totaling $540 billion, representing a 1.6% decline. And in 2019, with a total of $558 billion, but higher than expected considering the pandemic. Joining us now is Mr. Oladipo Ajayi, head fixed income at Chapel Hill Denham. Thank you for joining us on the program, Mr. Ajayi.
Good morning. Thank you very much for having me on this morning.
Good morning. Good morning. So, looking at this report, was this a less than expected decline? Was it deliberate, and what were the factors that actually led to this?
Yeah, to be honest, I think it's actually a surprise figure. It was actually less than expected. The expectation was that it's going to decline by close to about 7.5 to 8%. And the expectation was that we're expecting about $508 billion compared to the $548 billion that we saw in 2019. And one of the reasons why the expectation was that way was because of the pandemic that happened last year, and considering that a lot of countries were shut down for an average of 2 to 3 months. So you weren't expecting a lot of activity, and that will actually spur remittance of flows to destinations that we have, like what we have seen. So it's actually surprising, because compared to what we're expecting $508 billion. What we saw was about $540 billion based on the reports that was released by the World Bank. So it's actually a very surprising figure.
So remittance inflows rose in Latin America, the Caribbean, South Asia, and the Middle East, as well as North Africa. What's the explanation for this?
I think for that part of the region, I think one credible explanation that you can actually mention is the cost of remittance. When you look at those area highlighted, if you look at the South Asia, the average cost of remittance is about 5.8. If you look at the other part, is actually about 5%. But if you look at sub-Saharan Africa, the average cost of remittance is about 8.5%. So when you look at some of those things, it's actually a deterrent to actually remitting funds. And on a lighter note, if you check Nigeria, for instance, we saw us declining seriously and by about 27.7%. And if you look at that figure, I think one of the things that you can actually say led to that is because there are other windows that people actually leverage that is not accounting to our own coffer. For example, a lot of people were doing more like a P2P movement directly that does not warrant the funds leaving the offshore to come into our market. And I think that's what necessitates why the CBN actually came up with that incentive to actually reduce the cost of remittance by giving a $5 for every dollar that you actually remit into the country. So with that, the CBN feels that will go a way in reducing the cost of remittance and also spur action in that window.
All right, Mr. Ajayi, the company income tax for the first quarter in 2021 shows that Nigeria generated the sum of about 392.8 billion naira. This represents an increase of about 971 billion naira compared to 295.7 billion naira recorded in the corresponding quarter of 2020. That's a 32.82% increase compared to the 294.72 billion naira generated in that period. Would you say the tax drag net has been expanded?
No, I got doubt. I'm not sure the tax drag net has been expanded. And I think exactly what happened is because most of these companies increased the cost, the prices of their goods and services. So as a result of that, that necessitates a better bottom line than what we saw last year. And as a result of that, that's what actually led to the increase in the tax remitted to the federal government. So it's not a function of volume. It's not a function of the fact that we've been able to capture the other more people into the tax net. Is basically as a result of increase in prices that actually increase the bottom line to most of these companies, and also trickling down to the government as in form of tax payments.
So is this increase in prices what is also responsible for the breweries, the bottling and beverages sector generating the highest amount of company income tax for that period?
I think so, exactly. Because if you look at Nigerian breweries, for example, Nigeria Brewery grew their revenue by about 27% and grew their bottom line about 39%. For Guinness grew their top line by about 20% and grew their bottom line by 35%. The revenue growth that we have seen is not as a result of the fact that there has been increase in the volume, but if you notice critically, there has been increase in prices of some of these products in the market. If you take, for instance, if you look at the retail price of a Coca-Cola drink, as of last year it was for 100 naira per bottle, but as we speak now it's about 150 naira per bottle. So that shows like about 50% increase in price of products. So as a result of that, you expect that to lead to increase in revenue, and as a result of that, also impact the bottom line positively.
All right, moving to the fixed income market. Now, the CBN offered some instruments in 91-day, 182-day worth 117.56 billion naira, and it was oversubscribed in spite of the liquidity squeeze. Would you say investors are satisfied with the yields in the market?
To some extent, if you look at where we're coming from and where we are today, if you look at as of December, where some of these instruments, they are actually trading less than 1%. And when you're looking at effective yield of a 9.75 bills, it gives you a double-digit return. So a double-digit return to most people is actually a very nice place to actually put their funds in such a time like this, when there's no clarity in the market, policy directions are not totally clear. So instead of people risking their fund, they tend to put it in a safe investment like treasury bills. And as we speak, a double-digit return in that sphere is not a bad one for everybody investing.
So there was a lot of cherry picking by investors in the treasury bill secondary markets, leaving it bearish last week. What's your outlook for the week?
For this week, we expect a lot of actions at the beginning of the week, and considering the results of last auction, a lot of people lost out in the auction. So you expect most of these people to come to the market to actually cherry pick. But aside that, we don't think there's anything that is in the market to actually any sentiment to drive the market positively, because there's a lot of there's depth of liquidity in the system, and that will not actually create activity in the market as expected, but just that those people that lost out in the last auction, we expect them to come to the market to actually cherry pick across maturities.
And the MPC is just about a week. How do you see it driving the market? What's your expectation?
Yeah, this week we're expecting bond auction, and the bond auction will actually also impact the market, because as a result of bond auction, we will not see much activities until Wednesday when the result is out, because that will channel the new course of the market for the short term. And in the same vein, the MPCs for next week. So a lot of people will be very quiet because analysts' opinion is that there's very likely that we might see rate hike in the region of 550 to 100 basis points. If you look at the last MPC meeting, we saw 3 people that voted for rate hike, and 2 people voted for a 50 basis point, and 1 person voted for a 75 basis point. And if you check the market dynamics as at that time compared to now, you would have seen that yield in the fixed income market has moved close to about 200 basis points from where market was actually trading at that time. So as a result of that, we think the MPC will likely want to regularize the market by actually pushing the rate up a bit.
All right, thank you so much, Mr. Oladipo Ajayi, the head fixed income at Chapel Hill Denham, for sharing your thoughts with us this morning. Well, talking about the markets, let's check with Anetie. 3 working days, Anetie, and the market ended in the green. That was a good one for the week. Do we expect to see that again this week?
Yes, Ini, thank you. Yeah, the bulls regained control over the markets against their rival, the bear, in a holiday-shortened trading session last week. So, you know, when you take a look at the weekly activity here, you can see that we were up 0.72%. And then that's, of course, because that's due to the buying interest on some of the key stocks on the NGX. But if you now take a look at the value, the activity, it was rather weak. We were down by more than 52% in terms of volume and value. And then, of course, the year-to-date loss, well, you can say that one has been reduced to around minus 1.9%. So, okay. So to give us more insight on the market, let's join Rotimi Fakaejo. He's a broker at the equities market. Thank you for joining us, Mr. Rotimi.
Good morning.
Okay, so now the market has been able to, you know, sustain the uptrend in 3 sessions last week. So what do you expect the market to, react to the inflation figures that we're looking out for today?
Well, I think the inflation figures has been on an incremental rate. So it's quite expected and that the figures will be as they are. And even in subsequent months, the inflation rate may be tending towards 20, effectively. And so there is no more news to the market. Many of those things the market has already factored in and priced in as well. So I do not really see a significant effect on the way the market will play out this week with respect to the inflation figures.
Okay. So now, tomorrow, the NGX will be launching the Stock Africa is Made Of campaign, which will be attended by some top government officials. Actually, the president is supposed to attend. So it will be attended by other capital market stakeholders. So what impact do you see this campaign having on the local bourse?
Well, I think for every event like this, it talks more about the market. It creates more market awareness. It improves investors' education. So there is no way this will not have this kind of impact, will not come out to play on the market. And I think the sensitivity of the market to the economy is quite high at this time. And that is also the more reason why we should have more awareness and programs like this. So definitely we're going to see a lot of impact coming after. Or it may not be in the immediate, maybe in the medium term and the long term. But definitely events like this would actually promote the market.
Okay, so thank you, Mr. Fakejo. So we'll keep our fingers crossed for that. That was Rotimi Fakejo, stockbroker at the stock market. So now we move over to the fixed income market. The NASDAQ was down, was a bearish week for the NASD, where we were down by 1.2%, and that's because of a sell pressure on investors. So you take a look at the volume, was also down. Volume has been reduced to about 124.89 million units. Then we move over to the debt markets. FGM bonds, the best performer there was the 26th of April 2029. And it also shows you that there's a reduction in activity levels there. Over to the NTB bills, no activity there, as you can see. Then also for the CBN bills, not much of activity, just 2 deals recorded on the 31st of March 2021. Then for the OMO, a little bit of uptrend there. 20th of December 2021, later this year, had the highest deals there. And of course, followed by the 22nd of... okay, so now to give us more details on the fixed income market, let's join Taiwo Olajubu, who is at Access Bank. Thank you for joining us.
Good morning. Thank you for having me.
Okay, Taiwo. So the fixed income market and the debt market have been having rather lackluster bearish performance. So what's driving this sell pressure?
Okay, good morning. Thank you very much. So for a while now, we've seen the bearish sentiment in the fixed income market. For the yield market, we've actually seen people selling, and it's basically because of the expectation that yields are going to rise. And this also applies to the bonds market. So for the bonds market last week, it was a rather quiet market last week, given the public holiday and the debit in the system. But previously, it has been on a bearish slide, and we expect to see that this week because of the expectation that yields will rise. And there's also a bond auction this week, which we expect that will be oversubscribed. We have 150 billion that will be on offer, 50 billion across 3 maturities. And at the last auction, we saw that the yield closed at 12.25 for the 27s, closed at 13.34 for the 35s, and 13.85 for the 45s. And we expect that at this week's auction, there will be...
Sorry, for that loss in connection. So that was Taiwo Olajubu, Treasury Sales at Access. Okay, let's. Sometimes that happens. So if you can see we were talking about the debt markets. That's not much of activity there, but we're yet to see if maybe investors will be shifting gears from the fixed income market to the equities market, which has been seeing a lot of uptrend. And of course, that's where they say put your money where your mouth is. So some investors are, it's the start of a new week, the 3rd trading week of May. So now we're expecting that the equities market will be the toast of investors' appetite. So, Ini, I don't know what your guess is.
Yeah, but when you say that the equities will be the toast, with the yields also going up in the fixed income, that is questionable, don't you think?
Well, I'm just an analyst, so let's leave it to the traders and the
yes, and I know you
investors.
spoke to Mr. Fakejo about the inflation figure. I mean, there's the GDP figures expected, and then the MPC. Perhaps this will drive more activities, both to the fixed income and to the equities market.
Well, I guess the pulse of traders is more on the buy interest in the equities market. So, and of course, for the bonds market, for the debt market, if the inflation figure is higher, that would trigger a lot of buy interest in that space. So, but let's just keep our fingers crossed for the outcome of for the release of the data from the National Bureau of Statistics.
And then the issue of the corporate earnings. I mean, that seems is that season over for the first quarter?
No, well, we're still expecting. We're still expecting a flurry of earnings, maybe just some to trickle in before the end of the week. Maybe like a batch of 5 earnings later this week, and then of course next week will be the last trading week for the month. So we continue to keep our fingers crossed on that.
But don't you
also
see that as a factor that might, bring some activity into the equities?
No, I don't think so. I don't think so. So many factors can contribute to the market. Of course, it's a dynamic market, so you just sometimes it could be one information or the other. It could be just some buying interest. So you just cannot predict the market.
And I know an analyst did say that one of the things that investors are looking at now, beyond the earnings and all that, is the issue of management. The personnel and the management, the policy that's being used to run the organizations.
Well, let's put it this way. When you look at that, it's more of
I need to shut up words.
The governance there.
Yeah. All right. Thank you so much, Anete, for the update. And we're looking forward to a very positive week again this week. And we hope we would see that,
Exactly.
Anete. But anyway, we'll take a break now. When we come back, we head over to London. Stay with us. Welcome back. Well, in England, Wales, and some parts of England, there is a cheery mood this morning as the long-awaited 17th of May is here. Juliana joins us from the London studio. Hello, Juliana. Good morning.
Good morning, Innie.
Yeah, so hugs and foreign holidays begin today. What's the mood on the streets of London, and what's the expectation of investors?
I would say it's definitely buzzy. It's buzzy. A lot of people are excited. I went into a local store today to get a coffee, and I was shocked going in. The music was blaring. There were customers sitting, having a coffee outside of the cold. It's come at a very good time because it's been very, very cold here in London, and it's been very wet. People have still been sipping wine and eating outside, but alas, today the doors are opened, and I think people are very excited. Lots of restaurateurs have been doing the media rounds on British TV this morning saying they're very overwhelmed, very booked. I think it's going to be very difficult to get a seat in a Michelin-star restaurant for the next couple of weeks at least. So it is really good news. Last week we spoke about the GDP, didn't we, showing that in the first quarter the economy contracted by 1.5%. So I believe that now's the time the Treasury are going to hope that the economy can start kicking back into steam again. But as you mentioned, the Indian variant, Boris Johnson, the Prime Minister, has asked people to urge with caution because, of course, there isn't, it's not just the hospitality industry that's open. People can hug again. I haven't had a hug this morning yet, Innie, but there are so many other restrictions that are being eased. So we still do have to be careful, but it's a good day.
I'll give you a virtual hug, Juliana. Well, Ryanair is not having it so good. Their annual after-tax losses at £815 million. But would this ease of the restrictions help their business?
Well, absolutely. One of the biggies that we didn't discuss is, of course, the lift of the ban of international travel. I believe Portugal, which is on the green list, have had about 20 flights scheduled today. I believe about 3 have already arrived in Faro and in Lisbon. And, they're really excited to welcome British travellers. Ryanair, as you said, they're Europe's biggest budget airline. They've posted losses losses today of over 800 million euros. If you compare it to the same period last year, they were posting profits of over 1 billion euros. Obviously, this isn't unique to Ryanair. The international airline industry has been embattled, hasn't it? They've had the lion's share of losses due to COVID-19. Ryan O'Leary, the very outspoken, shall we say, CEO of Ryanair, he's been speaking this morning, and he is positive. He said that he is seeing an increase in bookings in the month of April, and he does expect summer to be obviously not what we were seeing in 2019, but certainly better than what we saw last year.
And then with the boost in social activities, what's the outlook for the week and what data are we expecting?
It's a pretty busy week this week. We're going to get PMI figures, flash PMI figures for the month of May. Towards the end of this week, we've already been seeing significant surges and increase in services, manufacturing and construction. So we're expecting that to potentially be record-breaking. On Wednesday's D-Day, the big thing everyone's been talking about, inflation. We're going to get year-on-year inflation. Economists have put that at about a 1.4% increase, or a 1.4% release. It was 0.7% during the month of March. 1.4% will be significantly high. That's almost a double jump. And then tomorrow, unemployment data currently stands at about 4.9% in the UK. Some are expecting it to shift up to 5%, but who knows? It could actually even go down to about 4.7%. We'll have to wait and see, and obviously I'll have an update for you.
Yeah, we'll sure wait and see, Juliana. Thank you so much, and do enjoy the rest of your day. Okay, so we move over now to the crypto space, and Elon Musk is still pulling Bitcoin one way or the other. Laji.
Yeah, Ini, well, that hug you offered Juliana earlier, I'm sure a lot of traders
Oh
would
my
need
God, this is too red.
that hug right now. Look at Coin 360 there. All red. Just a couple of coins in the green, just a Solana rune, but Ethereum is down $3,486. Bitcoin, $44,885, down about 8%. That's the Elon Musk effect. And look at the market. The fear greed index, it's fear right now. All over the market is fear at 27 right there. Let's look at the market cap. $2.707 trillion traded, down about 9.10%. 24-hour volume for the whole crypto market, $307.11 billion, up about 12.84%. And Bitcoin dominance still down there at 40.23%, just up about 0.14% this morning. Price of Bitcoin, $44,107 at 8 a.m. 24-hour volume, $76.73 billion traded. So it's looking really red in the market. Let's talk to Olumide Additional, our financial market analyst. Hello, Olumide.
Yeah, hello, Ladi. Good morning.
Good morning. Great to have you, Olumide. So the market now is all about FUD. It's all about Elon Musk either selling his $1.5 billion Bitcoin he bought or not selling. How should traders be trading this market right now?
Yeah, I think the market reaction has been very parabolic. That's the best way to put it. Because if you notice, prior to the last week, opening of last week, we saw that Bitcoin had challenges breaking above $50,000 mark. And some comments by Elon Musk about the environmental impact. The proof of work being executed by Bitcoin consumes a lot of energy, and that really triggered a lot of sell-off because environmentalists were already complaining about the effect Bitcoin had. And we saw that prices were already moving around 47, 48, couldn't maintain that over the weekend. Then another comment from Elon Musk triggered record sell-off. In fact, Bitcoin went as low as 43 before adjusting after Elon Musk later retaliated that he wasn't, Tesla wasn't how the market volatility is reacting to these fundamentals. But I think it's fair to behind this triggers. Most of the sell was occurring from Bitcoin investors. And if you look at the futures market in the crypto section, a trader lost about $18 million, and that was because it was overexposed. So we found out that while the market so to back that data from Bitcoin treasures shows that in the past 30 days, institutional investors have bought 215 Bitcoin. So that gives you credence that the market is still much in a bullish one amidst the price volatility going on.
All right, looking at the argument about energy consumption, some analysts believe that the proof of work style is causing a lot of energy issues, but they also talk about the proof of stake. So which one actually works better at this point?
Yeah, the bars on both sides, but the truth about it is that proof of stake consumes less. But you need to understand, and it gave miners more capability to produce, and the playing ground then was so easy because all you just needed to do was perform tasks and be part of the blockchain. But now, to be part of the proof of stake, you need to show that you have this asset. And on the Ethereum network, I think it's about 32 for you to take part in that, and that tells you that it's a lot of money, becomes very competitive. So on both ends, yes, it looks like proof of stake is energy conservative, but in the long run, we are looking at the fact that these assets, at one point, we need to even go on a much better scale because the mining power or energy is the Bitcoin, the crypto market has shown to you that energy is being consumed at record levels. So, and the fact is that money is stored value. So, market pundits will tell you that energy can't be reduced to such record level. What we just need to do is that miners need to go into renewables, we need to invest in alternative energy, and that will somehow reduce the carbon print that environmentalists are complaining about.
Okay. All right, Olumide. So what's your advice to that newbie trader out there that's down about maybe 50% or 20% right now?
I didn't get that properly.
I said, what is your advice to that newbie trader out there that's down about maybe 50 or 20% because of this pullback?
Yeah, I think it's fair to say that like the usual narrative is that don't get too exposed. If you're a retail investor and you're just entering the market, you should tiptoe. Now it looks like the market is a premium. Most investors holding in the past 1 year or more than are not on board. In fact, recent data suggests that the wallets have not moved, telling you that most of them are in profit gain. So I think the problem with retail investors is that they get carried away by the price volatility. It's normal in the crypto markets that price moves between $5,000 to $6,000 in hours. So my advice for retail investors: don't get too exposed. Don't get your advice from social media. Speak to your financial advisor or any certified investment bookmark to take your financial decision.
All right.
Thank you.
All right, Olumide. Thank you so much. Great advice there. Don't take your financial advice from Twitter. Thank you, Olumide. So, Ini, that's it. That's the market.
But, Ladi, I think there's also another side of this story that, I mean, the actions and decisions of Elon Musk is also attracting some business people, to look into Bitcoin.
It's getting a lot of attention from other billionaires. They're looking into Bitcoin now. Like, okay, is this a time to enter now that we have a major
Now that
pullback?
it's at the dip,
Exactly.
So we might have another Elon Musk in a couple of months.
There will always be another Elon Musk.
Anyway, thank you so much. That'll be all we can take on the program today. I'm Ini John Mekwa.
And I'm Ladi Williams. Thank you for watching.